Welcome to Yellow Tunnel. My name is Macroeconomic. I'm CEO and founder of Yellow Tunnel, and today I'd like to go over current market conditions, talk about NVIDIA, probably the most popular stock. We have Netflix, TSM announcing earnings, which strategies work in the current market conditions, how to build your portfolio, and how to find opportunities in the market using options, Yellow Tunnel tools for options and stock trading. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. Always want to welcome new subscribers. I appreciate everybody joining. The difference between Yellow Tunnel and maybe some of the other services out there is that my background is technology. I was an executive in several startups here in Chicago that went public. So my experience working in a brokerages firm, hedge funds. This is where I learned the tools and technologies that started TradeSpoon over 12 years, Yellow Tunnel 5 years now, and we have a team of financial engineers that are building models based on the latest advances in artificial intelligence, and I'm using these models and signals generated by these models to trade and manage my own portfolio, and that you can subscribe to the portfolio real time using either the website or a combination of website and SMS messages. Disclosures are very important. Please read them. Trading stock and options involve risks not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. And again, please visit this link on your screen if you're new to trading stock or options. All right, before we jump into process, right? The goal is to become a disciplined trader, confident trader. I cover some of the important topics to consider. Right? The economy of control basically says that you can only control your own thoughts and actions. You can't control the thoughts and actions of stock market or policymakers or the results of the elections, right? So there's always uncertainty in the market, but you can prepare for these uncertainties by following your process. Trading journal, write down all your rules in the journal, in the trading plan, and then in the journal, write down every trade you make. And before you get into a trade, you would have to go through the checklist. Right? We'll talk about that shortly. You know, the only way to deal with fight or flight response, right? We all go through this process of learning where in the beginning, outcome is more important than the process. So you don't have the process, right? Most retail investors don't even think about stop losses, right? Or when do you exit your position if if the trade goes against you. So going through these positive and negative visualizations are important. Fight or flight response, right? The only way to avoid flight or fight response, right? If the market does go against you, is to control the number of position size. That's why everywhere on Yellow Tunnel and all of our services pages, it actually proposes, only have 4 positions. And only 2.5% of portfolio per position should be at risk. Game theory, right, is important. It doesn't matter if you're bullish or bearish, right? It doesn't matter what you think or what I think. What matters is what majority of the people think, right? What's the consensus? Is the consensus soft landing or is it hard landing, right? You could be in hard landing camp, but if everybody thinks soft landing, well, it doesn't really matter what you think, right? So more important to understand what other market participants think. Compounding investment, right? I talk about barbell approach quite often on earnings strategy. We can structure a trade where you can look, especially with option trades, you can look for triple-digit returns, right? 100%, 200, you invest 20 cents and you make 80 cents, right? Those trades exist, but they have small probability of success. And then you have, other structures of the trades like cover calls, more conservative that maybe give you smaller returns, right? Maybe 20%, maybe 30% using options, stock maybe 5%, but they happen a lot more often, right? So the idea is to build this barbell approach to your trading where small percentage of your portfolio, you take riskier trades, and majority of your portfolio, you're taking more predictable, more high probability trades, which is important. And then compounding works, right? Over a period of time, you have your month to month, quarter over quarter, year over year goals, your portfolio will grow. Practice internalization, right? It's important to internalize these concepts on a daily basis. We do have live trading room every day, morning bell and closing bell, which you can participate. These are paid services. And we can show you how we manage, how we generate signals, how we manage them, how we trade, and you can learn, right? We also have one-on-one coaching as well. So that's yellow tunnel in a nutshell. Let's talk about current market conditions. If you look at our portfolios, right, we have 5 basically services. They all have this kind of format where we give you the spiders, right, support and resistance for the reflection of the entire market, right, S&P 500. And then every day we post different trade ideas, right? So aggressive power trader on Friday was Bank of New York. I actually entered the trade. General Motors, I did not, and REITs, some of the REITs. So every day there are signals. You can see them in history. If you hit on history tab, every day you can see all of the signals that are generated. And then in the recording section on the trading room, you can actually see all the trading room sessions. And we have a library of webinars, strategy roundtables, both on TradeSpoon and Yellow Tunnel side. And that's aggressive power trader. So for spiders, it sees 581 support on Friday, 586 overhead resistance. And longer term, it still sees that the market is trading in uptrend, right? Potentially going into the end of the year, 590 or 610, right? 590 or 610, that's what model is projecting. With soft landing right now, market is overbought and we have elections, so I'm not sure how much more momentum can market generate, but we're 2 weeks away from the elections, right? So, you know, after the elections, once the uncertainty is gone, and so far, I think earnings are better than expected, right? Banks are in strong momentum breaking out, industrial strong momentum breaking out. We had Netflix had a good earnings. Some of the, not every credit card, but Discover Financial, Synchrony Financial had good earnings. So far, I think the market, you know, likes what they see, and you can actually see pretty big drop in VIX in the last week. So VIX was at 20. People were concerned about Middle East and elections, maybe earnings season, but Middle East, there's escalation, so VIX has dropped, crude oil has dropped. Right, so you have drop in crude oil, drop in VIX. Bitcoin started to break through this downtrend, retesting 70,000, not that far from all-time high. Hasn't really gone anywhere from basically 2022 high. And that's also positive for the market. Bear case, you know, maybe gold, right? Gold continues to make new highs, right? And people are kind of questioning why is Bitcoin going up, gold is going up. It could be inflation, right? Structural inflation that's not going anywhere, right? People hedging against the inflation. So that's one explanation why Bitcoin is at all-time high and gold is actually one of the best performing asset class in 2024. So I'm bullish on gold as well. And in terms of stock market, spiders, again, broke through the 565 level, consolidated around 575 for 3 weeks, and now 2 weeks in a row, trading higher, going into elections, going to the earnings, continue to make new record highs. Semiconductors has been lagging, right? Usually, that's another maybe bearish sign. Usually, semiconductors are leading the market, right? This is a proxy for the state of the global economy, right? But NVIDIA at all-time high, not breaking out. ASML had earnings, they were negative, right? They were negative, so big drop in ASML. Taiwan Semiconductor had earnings and good earnings, right? It did drop. It was at 220, I think, or 210. What is the high? 212. It was 212. It did pull back to 200, but nonetheless, you know, Taiwan Semiconductor is a good proxy also for what to expect from the earnings season. Usually, if Taiwan Semiconductor does well, you know, then the rest of the stock, the rest of the semiconductors can follow. But we'll see. In the next 2 weeks, we'll have AMD, Texas Instrument, so we'll have a better picture of the semiconductor. So, but so far, bottom line, Semiconductors lagging, QQQ at all-time high, but not breaking out. And the most, the most actions are in the banks, right? Banks announce earnings. Value stocks in general continue to outperform, and XLF continues to trade higher. Breaking to the upside after strong earnings from BK, right? We can see Bank of New York. Morgan Stanley had a strong earnings, and positive price action. I think JP Morgan is lagging, but nonetheless at all-time high. Wells Fargo is one of the positions. So banks are doing good, and when banks are doing good and the interest rates, right, yield curve is normalizing, right? Yield curve is normalizing, then that's positive for the market, right? 2-year yield below 30, below 10, and not that far from the 5-year yield. So that's all bullish signs. Right? There's some signs of concern, right? Inflation the prints came in a little bit higher than expected. Unemployment, initial claims come in, at that 250,000 people. My daughter is a senior in U of I business school, and she can find internship or so there's some signs of cooling over the economy and employment, but for now, that's not what people are thinking about, right? But something to be kind of careful and just observe, the data that's coming from the employment market. Retail data has been good, right? CPI, PPI may be a little bit hotter than everybody wanted to, so we'll see, right? We'll see. We still have a couple months left. So the question is, going into elections and end of the year, election is not that far. There's two things, right? During elections, sometimes there is volatility, right? If there is no clear winner, if it gets delayed, then people uncertainty, and then it could pull back, But usually, from a seasonality point of view, going into the end of the year, right? The model sees as of right now, there's still a strong momentum, not strong, but the momentum is deteriorating, but still momentum to get us to 600, 610 level. 600 is, 2% away. 610 is 4% away. So that's, let's call it 610 by end of the year, right? So that's scenario number one. Scenario number two, elections go south, maybe earnings from Microsoft and Apple are not as strong as everybody anticipated, and we drop 585, 5% would be 25, 560, right? The breakout level, 560, 565. Right, so we're trading in a range, right? We're trading in a range somewhere between 585 and 560 and going into the end of the year. So that's scenario number two. And scenario number three, we're breaking below that level. So how many of you think that we can get to 610, right, by end of the year? How many of you say, no, Vlad, even if we get to 610, we're going to pull back and we're just going to close where we are now, somewhere at 580. We'll be trading between 560 and 580 for the next couple months. And the third scenario, this is a false breakout with, 560 doesn't hold and we drop to 540, 520. So how many of you say one, scenario number one, up and away? Two, there's still signs of concern. Maybe inflation is higher than expected and CPI and PPI continues to trade higher. Maybe unemployment numbers tick up. Right? There's still uncertainty about interest rates. Is it 25 basis? After the unemployment data and retail data, I think 50 basis points is off the table. Now consensus is we're going to have, I think, 2 more rate cuts of 25 basis points each. Bob, Chandu, George, John, Lalit, MC, Mark, Peter, Rosie, Vito, or Vito, sorry if I'm not sure how to pronounce it. What do you guys think? 1, 2, or 3? Chandu, 1. Very good. Bob, George, Lalit? Anyone else? Lead to, okay. All right, I'm going to go with one as well. I think we will get to 610. I mean, I think short term we could get to 560. You know, after the elections, it's totally possible, even maybe 550. But I think we're still going higher to 610. And that's what the model basically tells, you know, predicts. So unless something derails that momentum, right, some negative news, I think that's the path of this resistance. I also have been looking at the positioning. Right, positioning is important, right? It's not, doesn't matter what Vlad thinks, right, or what you guys think. What matters is what other people think. Going into, you know, going into elections, right, and beyond. So we're going to select. Well, October expiration is, you know, we're done with that. So we have November expiration. And December expiration. Right. So you can see, if you look at the expected move analysis, just looking at the demand and supply for the options data, and you on your screen you can see November 15 expiration, December 20 expiration. Based on everybody, this is what the expectation, that we can move another 4%, right? Somewhere between 600 and 610, 600 and 610. Right now, highest gamma position is at 590, so we need to clear the 590 level. So short term, especially before the elections, that's why the model doesn't see a lot of momentum beyond 590. I would consider trimming the position. Right, 590, until we break through this level, I think this level, dealers will step in and start selling. So if you do have, you know, spiders, or you long the market, then potentially you can generate additional income by selling 590 call. I mean, you're limiting your upside, obviously. Maybe it's a call spread, maybe you sell 590, 600 call spread, but this is extra income that you can generate. On the downside, you have positioning 580, some positioning at 575, not a lot, and then 570, right? And you can see in terms of gamma, this is one of the bearish arguments. It kind of didn't work out yet, but if you look at the total gamma for November, it's less than $4 billion right now in November expiration, right? It was 20 billion in September, maybe 10 billion in October. November, the gamma is decreasing. That means open interest is decreasing, positioning is decreasing. So that opens the door that if there are negative surprises, like something going wrong with elections, right, and we have kind of social unrest or something like that, that could lead to volatility, kind of, because the market is not well supported. So it is something to keep in mind as you're going into elections. But based on supply and demand, on the upside, 6.5 to 6.10. So that's what the majority of people think, right, based on options data. If soft landing narrative continues and there is no black swan event of social unrest, which is very hard to predict, then you could get to 600, 610. And on the downside, you could revisit, let's do 50 strikes. On the downside, you could revisit 560, which is probably at this point 50-day moving average. I didn't check, but I'm going to make that assumption. Yes. So 560 level is your 50-day moving average, well supported, not well supported, but high open interest at least. Probably one of the highest open interests right now is 560. So 560, I would consider going long. Short term, I would trim at 590 because that's where the largest open interest right now is. So dealers are forced to sell if it reaches 590. So I would sell 590. I have to actually put a reminder for myself. Keep forgetting, sell 590. For my retirement account, you know, I do like to generate some extra income. So, you know, until we clear 590, you know, I think that's your overhead resistance. If we clear 590, you know, let's say Apple and Microsoft hit a home run, then, or NVIDIA, then 600, 610. Any questions on the open interest? I mean, you don't need to know what gamma is, right? But you just need to understand that this gamma exposure is calculated by taking open interest and multiplying by gamma. And gamma is just, basically how quickly the stock price changes at different levels, right? For $1 stock change, you look at the delta and then you take delta over, one move of underlying stock price, right? Second derivative. So you look at how quickly the price changes, right? And then take the second derivative of that. MC, I think it depends on who wins the elections. Short term, I agree, right? Short term, you could have volatility, right? Remember when Trump won in 2016, right? We can look at that, right? We don't need to guess. I like to look at the history, right? The last election was Biden. This was what, 2020? So market actually did pull back into elections. Like I actually thought we're going to have similar pullback. We didn't. But then after elections, once Biden won, market took off, right? That's 2020. Then 2016, Trump win, right? Same thing. Going into elections, we did have a sizable pullback. I remember on the day of the elections, futures were, down 5%, but then a couple of weeks later, it just took off, right? So that's 2016, 2012, Obama. Same thing, pulling back into October, elections, and then after elections, I mean, you had short-term volatility, but then the market continued to rally, right? So, and so on and so forth. Obviously, in 2008, when you have financial crisis, if there are some black swan events, then yes, market is gonna, pull back. Assuming no black swan events, I think election could cause short-term volatility. I do agree with that, but it's probably not gonna last too long, unless you have global financial crisis, right? Like regional banks gonna start defaulting because corporate real estate, level of bankruptcies is too high, or level of individual credit card bankruptcies is too high, and something triggers an event where you have liquidity issues, and let's say corporate high yield start collapsing. So far, high yield is very strong, right? That means people are not, there's no signs of dislocations. So, but for now, I would not think that election is going to make that big of a difference. Any other questions? All right, so bullish on the market. We talked about aggressive power traders. So every day, if you're looking for signals, right, then this is the place to start, right? It's aggressive power trader. You can look at my orders and you can look at my positions, right? Like BK. So some of these signals I do trade. I don't trade all of them because again, I'm trying to stick to the rule of, for majority of the people, on average, you want 4 active positions at 2.5%, right? And every day we're generating 3-5 signals. But if you're a confident trader and you've done this before and you have a trading plan, right, and you keep in a journal, then this is an idea of how to build your portfolio, right? If you don't have exposure to banks, we have signals in BK. If you don't have exposure into retail, maybe, or consumer discretionary, maybe General Motors, right? Or Ralph Lauren, RL. I haven't updated the data, but I was looking at the results and I see, Ralph Lauren, JWN are just quietly are breaking out, right? Soft landing. So we have Kohl's, JWN, Ralph Lauren, and XRT in general are breaking out because stronger than expected retail data. So that would be aggressive power trader. Similar weekly power trader, a little bit longer term signals. If you like to hold the position for a couple of weeks, couple of months, then you can look at the weekly trader, right? American Express, Costco, CrowdStrike. How did CrowdStrike actually do? Last couple of weeks, I think it was going higher. Yeah, so I mean it's flat. No, it's up. Okay, so that has been a signal for past couple of weeks. Also continues to trade higher. So that's weekly power trader. Dynamic power trader. It's not just signals. These are my portfolios. So dynamic power trader, I trade stock and options. So you can see all of my stock and option positions. Right, I have eBay, LA Lilly, Meta, Triple M. I closed Triple M. Both stock and options. Earnings power trader, this is where I try to find these asymmetrical returns, right? Didn't find it this week. We got close with Bank of America, but didn't make it. Did well with Micron before, but this is where I try to structure trades where if the stock does move in your direction and reaches these high open interest levels, that's where when you can find a right strike price, whether it's a butterfly or a spread, you can generate these double-digit, triple-digit returns. So that's earnings power trader. And finally, if you just like stocks and you're not comfortable trading options, we do have Profit Accelerator where I trade stocks, right? So we have JP Morgan, eBay, LA Lilly, Triple M. Silver made a strong move together with gold this week, where it is trying to break out and continue to go higher at all-time high, up 6% on Friday, along with GDX. All right, any questions? There are a lot of people today. Love it. Thank you for participating. Bob, Chandu, John, Fred, Steve, Lalit, MC, Mark, Peter, Richard, Rosie, Vito. Any questions? There are no questions. Let's just quickly summarize some of these. NVIDIA, right? We're here to talk about NVIDIA. I forgot. Well, NVIDIA now announcing earnings, right? I think it's end of November. Right? November. When is NVIDIA earnings? Usually it's end of earnings season. It's probably end of November, if I have to guess. Actually, middle of November, November 15th, right after the elections. It is at all-time high. I would probably at this point not chase NVIDIA. I would wait for a breakout, right? Something like silver. Right? Once you see a breakout, at least for 1 or 2 days, right? Then you can say, okay, I've been waiting for this breakout for now 6 months. If it's confirmed for a couple of days, then okay, silver continues going higher. Same thought process would be in NVIDIA, right? If NVIDIA breaks out, maybe before earnings, AMD, I think next one is AMD. When is AMD? 9 days. So AMD, that's usually a good proxy. Texas Instrument is in 2 days. Texas Instrument is in 2 days. So that's when you can, would be a good proxy for how NVIDIA is going to do, right? But until it breaks out, I think more risk to the downside than to the upside. And if you look at the earnings, what did it say, November 14? So you look at November 15, 12, 20 in terms of expectation. High open interest at 180, right? So one standard deviation move would be about 15%, right? Between now and December, 15%. 2 standard deviation would be 30%, which is 30% of 138 is $40, which is 180. So 2 standard deviation could be $180 stock. 1 standard deviation is $160 stock. So you do have high open interest at 160. And on the downside, 130 is well supported, 125 is well supported. There's not really much support below that. So that would be the expectation for NVIDIA, right? I would look at the supply and demand for options data, right? The 120, $18 to the downside, or 160, $20 to the upside. So that's kind of where a lot of expectations are with a one standard deviation move. Positive news, it could be a $160 stock. Negative news, it could be a $120, $125 stock. If it breaks out, target for Bitcoin. So the question is, if Bitcoin breaks out, the target. I mean, there is statistics on the ascending triangle. I think it's half of this distance usually, right? So if it breaks out above 74,000, I mean, it broke this downtrend. The next thing it needs to break out is all-time high, which is not that far, 74,000. Then I think it's the distance, 70% of the time it will be half of this distance. So 76 or 50, another 10,000, so 100,000, 80,000, so 90, 95,000, I would say, would be the next target if it breaks above 76,000. But it still needs a little more love, right? Because we just broke the downtrend. So it needs to clear this level first, the July high, then June high, and then all-time high. Once it breaks all-time high, you know, then it could be the half of this distance. Two-year high, yeah. So thank you, Chan. So yeah, if it breaks two-year high, I think it could move half of this distance between this point and this point. Any other questions? People also do Fibonacci retracement, right? It's time for Fibonacci extensions. This is to the downside, same thing to the upside. But that's how you would do some of the projections. Right? But 50% of the move could be, you know, it could be 38% of the move, 23% of the move. But those are some of the extensions that you can look for. See, how do you draw this Fibonacci? Here. Yeah, so 24% is 80,000, 38% would be 83,000, 50% would be, right, because this is the consolidation for the past few months. If you want to do the longer consolidation, 2 year, let's see, 2 years would be what, 2022 to 2024. Two-year low, 2-year high. So 23% would be 85,000. I don't know how to. Can I move this down? Nope. Okay, but that would be the how you would do projections, right? Some people just look at the patterns and say 50%, but you know that would be one way to analyze it. I mean, it's, I don't know, 70% of the time that's usually what happens. You know, 30% is a false breakout and it reverses down, right? So you need to confirm the breakout first and above average volume. All right, guys, thank you very much. Have a great day. Thank you for participating. We have a lot of people, and I will hopefully see you in the live trading room on Monday. Thank you very much. Lalit, MC, Mark, Peter, Rosie, Vito, and everybody else, thank you.